Welcome to the 2024 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me on this Sunday edition, July 14, 2024. As we continue in this economic slowdown, as we like to call it, there is some bright spots with this economy. It's not all doomsday. The economy is still ticking along. It is still technically growing. Anything above 1% GDP growth per quarter per year is still decent, albeit. So that's the good news. And people are still out and about enjoying vacations in the summer with their kids and loved ones and family, as well as people are still spending, albeit at a slower pace. So there is some good news with this economy, but for the vast majority of us, 99%. Things are tightening up. There's some belt tightening going on, both in the personal and the business consumption world. And there's some decisions that need to be made economically, not just with families, but with businesses, corporations, and other people as well. And so this is going to take a toll on us as we go through the next 6 months, 7 months of this last year here. And into 2025, I believe that's when the rubber meets the road. That's when things are going to be a transition in this economy from a technocratic, autocratic economy where we're going to have, AI, automation is going to take over everyone's jobs, not just the low collar, the minimum wage, blue collar worker job. It's going to affect everybody in every sector. Automation, AI, the immigration situation, all that, all these jobs are going to be affected by that. The jobs that are created. And so we have to look at all that as people, we have to look at that as Americans, and this is what's going to be happening here. And so businesses continue to close. As you know, you can go to any major city, minor city, any mid-sized city, and you can see businesses that have commercial real estate that keep having all these signs saying for lease and the number of the agent, and it's not going to be filled. And a lot of times people have said they should turn those into those broken, abandoned malls into homeless shelters or community centers for kids to come and do things to keep them busy during the summer instead of getting into petty crime. Maybe they can go to a community center, a mall that's transformed into a community center that has training, on the job training, like they used to have apprenticeship programs. Just something, even if they weren't being paid a lot, at least something to keep the kids active in a lot of these cities that don't have a lot of things going on, and even some of the major cities that have things going on. So that's just something to look at here. I didn't want to rant too much, but let's get right into it, ladies and gentlemen. We said the economy, CNBC says, why not? Why would you tinker with it if it's not broken? The economists on why the Fed may not cut rates in September. So right now, this guy is saying, according to this article by Jenny Reed, she's saying that markets now firmly expect a September interest rate cut. This will be before the elections. They're pricing in a 90% likelihood, and I think that I would have to agree, because you look at the stock market is going up now because remember the stock market is 6 months ahead of what's reality, and they're looking at a rate cut. They're saying that the Federal Reserve, they're gonna have to cut these rates because things are starting to slow down. Job growth is not as high as they say it is. They say 200,000 jobs created, but how many of those are actually filled by professional working Americans? Not many. And how many of those are high-paying jobs, enough to sustain? We're talking over $25 an hour. How many of those are over $25, $30 an hour? Not many. And so you see the situation here, guys, where we're looking at, possibly a rate cut coming in. He's going to cave under pressure because he wants to be, remember, this guy wants to be reelected, Chairman Jerome Powell. He's going to cave into what Biden wants. He's going to cave in President Biden. He's going to cave into what any president wants, whether it's President Trump or Biden. They're going to cave in because they want this economy to continue to hold on. And the stock market is where the majority of the rich people, and that in real estate, either commercial or personal real estate, is where the majority of super billionaires have all their money, and then, of course, overseas too. But so he's going to cave in, and the rate cut is coming. The question is, will it be enough? And that's the problem that we're going to have here, folks. We can have a rate cut. Let's say we get the rate cut in September. It's only 25 basis points. Will that be enough to spur an economic growth, without the presence of a stimulus check? Now, that may be an option too. Maybe if they pair that, and then President Biden comes out next month, just before the elections in October, and says, hey, I'm giving everybody a $5,000 stimulus check. Let's say they just print up $5,000 and give every American, and if you have more than 3 kids, they give you $10,000. Let's say they do that, helicopter money. That will never happen, but let's say that will. Just say the bolster the numbers, because everybody's looking for these votes. So that could possibly be a situation, but the problem is that the problem is that it's twofold. For those who are employed, wages are not keeping up with inflation. I'm talking about real inflation. Wages are not keeping up with real inflation. Most people haven't got a raise that outpaced inflation since the Clinton years, back in 96 or 95. We're talking early 90s. So, and unemployment is growing here. You can tell it's at 4.5% right now, but it's still growing. And inflation, this 2% inflation goes a pipe dream, because even if you get the 2% inflation, you're still going to have high unemployment. And then what? So there won't be enough consumption to support the price levels that we have right now in this economy. So you understand what I'm talking about? So this is what we have going on here. And you can see in the chart here this is the U.S. Labor Department chart here. You can see that according to the U.K. and the Eurozone area, America's inflation is still elevated above the Eurozone and the U.K.'s inflation as of June 2024. Right now, they peg it at 3.3% for the U.S. 3%, but we know it's much higher than that. We know real inflation's at 10%, really, for Americans, and it's been that way since the last 4 years, even before the pandemic. Like 1 year before the pandemic, we were going into that. So that's no surprise there. You guys know. You guys have been following this channel for a long time. Now, mortgage rates shrug off seemingly threatened inflation data to hit 5-month lows. Okay, so they're saying that mortgage rates are still at 6.8%. It's still high. They still come down. Mortgage rates come down a little bit. They're coming down, so that's good news for those still looking for some type of housing. But the thing is that even with the mortgage rates come down, the price of the houses is still high. As you know, the average price for a U.S. single-family home, a decent-sized home, is like $420,000. And this is what you get, a cookie-cutter home. 16 inches across from your neighbor, and you can get a backyard fenced in, and that's great. That's a bonus. But so we're not getting much. The quality of the homes has gone down, as you know, and your warranties that you're getting is less now. Maybe 1 year, 5 years if you're lucky, on some of the structural integrity of some of these buildings that they're building. And so good luck with that. But the thing is that the mortgage rates, the mortgage rates have come down, but the price of the homes is still high. It's really high in the majority of the country. You used to go to the Midwest and get a home for $150K. Now that same home is $280, $293, $320, and it's like, what in the world? And some of these places, and even in the South, you used to be in Florida, some parts of Florida, you get a home for less than $250. Now it's $450, $550. It's like, what in the world, are they really worth this much? And so it's still going to be in a bubble in the housing market. We're still going to be in a bubble here in other markets as well. This is the everything bubble, the Roaring '20s. But all that's going to change next year, as you know. Like I said, regardless of who gets in office, guys, we're going to have a heck of a time with this economy. All Western countries, from UK, US, Canada, wherever, Mexico, even some places in Europe, Germany, France, Romania, all these countries are going to have a hard time because the production value has gone down. We don't produce anything, and that's reflected here. Consumer sentiment falls to 8-month low on frustrations with inflation. As you can tell, people are frustrated not just with the inflation, they're frustrated with the persistent price raises because they realize that a lot of this is greed. A lot of this is not no more the supply shocks they were talking about when we had the shipping channel blockage and the Suez Canal and all that jazz. That's no longer the case, folks. But people know it's just greed. People are smart out here. Americans are smart. We're all smart. And they know that a lot of this is just price gouging and greed, whether it's gas, food, utilities, homeowners insurance, you name it. Americans are complaining. They're frustrated about it, and nothing's being done because we have no advocate for us, ladies and gentlemen. We don't have a consumer financial protection bill that actually cares about us. They care about the dollar. They care about how much they can be bought out by the special interest groups and the iron triangle that they talk about in school. That is a real thing because now we have all these people just buying out stuff. So now they just tell you that we're going to fix it, but we don't fix it. Or they give you trinkets. They give you just a little bit of money to keep you happy, a stimulus check, or here we'll cut you, maybe we'll cut it 0.5%. But, in the meantime, it's not going to make too big of a difference. It's not life-changing money in your life. So this is what we're dealing with. We can get through this, ladies and gentlemen. Like I said, we have to continue to not just prepare physically, mentally, but also spiritually, because this is a marathon. And there's going to be a lot of evil things going on behind the scenes that they're not going to be talking about in the news. They're not going to be talking about on YouTube or anything like that. You have to discern for yourself, that God will give you the wisdom to discern for yourself and your family, as what direction to go. Well, not everything's going to be perfect. Like I said, even if you have all the preps, you supposedly have preps for 3 years or 5 years, it doesn't matter. A lot of that comes down to mental. How's your mental? How's your spiritual? How's your physical? One infection, one thing can change all of your plans. Immediately, one chronic terminal illness. So live for today, plan for tomorrow. Enjoy yourself still go out, go to the beach, go to the park. Continue to read books, continue to do things that you enjoy to do. Don't let this life feel like it's all about the money. It is not. Money is temporary. It's transitory. It's just a tool. And regardless, if you can't take it with you, we'll all have to go into the grave naked. Became naked, we're going to return. So don't let it stress you out too much. If you can't get something or for your kid, or you can't get something for yourself, or you can't afford to make ends meet. Everybody's in the same boat, but we have to continue to make do. Continue to take action as best we can with what we have, and we know things are going to be slowing down. So God bless you this weekend, ladies and gentlemen. Continue to subscribe to this channel. Preach to me for the pure truth about the interpretation of financial news as I see it here, and I appreciate your support and comments. I read them all, and I'll see you later on this week after we get more jobs report data and earnings reports on Tuesday. Thank you very much for listening. Talk to you then. God bless. See you soon.